The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 13th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside the subject heading, please put radio show question. And of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We have an absolute sea of red out there. You've got all the U.S. indices that we track trading to the downside, all the sectors inside the S&P 500 doing the same thing. We've got the Dow down 339 points, testing support. If we look at the equity future contract, we'll do that momentarily. The S&P is down 35. The NASDAQ is off 83. The Russell's down 25. The trend is off 82. Semi's down 39. We've got gold that's off $11. Silver's up 30 cents. Light crude is off $1.25. Natural gas is off 1 penny. 30-year Treasury is off 1 point and 18 ticks, printed out at 113.07. Now, our leaders in the clubhouse to the upside, led by Upstart Holdings, an $18 move, 27%. Spotify nearly 17% or 3%. Lithium Motors, $17, 4.5%. Tesla up $11, 3.5%. To the downside, led by Comfort Systems USA, not too comfortable, down 6% or $28. Waters Corp down $25, 6%. Westinghouse down 22, 11%. United Rentals $20, nearly 3%. And Synopsys down $19. That's a 3.5% move. So we got movers and we've got shakers. Of course, I want to look at what you want to look at. So send me an email, Steve at TFNN.com. If we look at the New York Stock Exchange, the advanced client oscillator is now below the zero threshold level. If it closes 2 days below this, that will tell us that sellers are the ones that now are in control of the general markets out there. Spot VIX index, which is at the bottom portion of my screen out there, is still below its 50-day exponential moving average. The 50-day for the Spot VIX is at 1655, and we're trading at 1630. So you're not going to get substantial move to the downside, even though you've got the advanced client oscillator below its zero threshold level. You won't get that until we start to see that Spot VIX trade above that 50-day exponential moving average. Again, I keep getting questions out here from folks that say they're saying that this is it. That this is like the 2007 top out there. This is like the 2000 top out there. And I'm saying it's not anything close to what those look like. Why is that? All we have to really first do right now is just take a look at the DAX. DAX is up 128 points right now. The DAX at a new all-time high today. My studies have shown, we've done this many times out there, but you can keep sending me those emails. But what I do here, and the only reason I think, or one of the reasons you turn in to listen to the show, is to take a look at the patterns that I'm sharing with you. And what I can share with you is when we get to those types of markets, the 2000, the 2007, the 1929 market, what we're going to see out there is we're going to see that all markets are going to head south to different depths out there, but all of them will each have topping patterns. I can assure you right now that the DAX does not have any kind of topping pattern. And that's the same with regard to the FTSE. The FTSE also negated its tops out there. So no, we may get markets that are moving sideways, chugging, maybe even move lower out there, but are we in a 2000 or 2007 top? Only if things have changed. And I don't think that those things have changed out there. So you can just watch even the DAX and the FTSE out there just to give you a feel for what's going on. Now, if we take a look at our U.S. markets out here, you do have the Dow down 325 points, the cash indice. If we take a look at the future contract right now, it's testing key support. And that key support is the bottom of its profile. And that profile level is down at 44,374. We're printing out at 44,367. If you go up top in the upper left-hand corner, you're going to see both rising and descending trend lines out there, and the mere fact that the ES Mini is trading with inside its profile. It's got support down at 59.36. We take a look at the NQ. It's testing the top of its profile, so its real support level right now is at 21,535, and that resistance is that descending trend line. What's that level today, you ask? That level today is up at about the 21.9-ish, 919 type area out there. And then finally, let's take a look at the Russell 2000, which is trading below the bottom of its profile. Bottom of that profile, 2265. You can also see that the Russell 2000 trading between both rising and falling trend lines out there. So again, nothing is damaged. We just have basically a sideways chugging consolidation pattern out there. But it's those international markets that are assisting us with understanding what the real message of the market is. And the message of the market is this ain't no 2000 top and ain't no 2007 top or anything along those lines out there. In fact, here, this will show us how the international markets are trading. Take a look at those markets. They're all to the upside. You closed higher in the Shanghai, the Hang Seng, and the Nikkei out there, and you're trading higher. You also closed higher in the Australian 200 S&P out there. So that's what it looks like. Let's take a look at, where do I want to go? I do have these charts open. See, was there anything else that I wanted to share with you here? I think the answer is no. So I'm going to go ahead and close, at least minimize that black background screen. Let's come out here and take a look at the daily equity future contracts as well using the white background charts. You're going to see the consecutive moves higher and lower in the very bottom. This is the daily time frames out there. You can see that on the ES Mini, as an example, had a 2-day rally. Now this is a 1-day move to the downside. Maybe it's a 2-day move to the downside, as the last couple moves down have been. Same consideration for the NQ, although this could be day number 2. Yesterday was a bit of a move lower. In the case of the Dow, this is just simply day number 1, but we know price is testing that key level of support at 44,374. What's the next support level below that for the Dow? It would be at 42,752 out there. But likely just to be a 2-day pullback. In the case of the Russell 2000, you can see that this would also be day number 2 for it out there. If we take a look at what's going on from an intraday standpoint, let's pull up some intraday charts out here. This is for the ES Mini. So the ES Mini, what do we see out here? What do we see? Let me start to repopulate this if I can here. You give me just a second. So in the case of the ES Mini, I'm just looking to try to identify, why did price stop where it did? Where was a level of support that was holding price? Was there a bottoming signal out there? So I don't believe there's any A to B equals CD pattern to the downside. So we come back from this break. I'll finish. We'll come back to these charts here. You can see that price held 60.2950. That's the 2-hour TD9 count breakout level. Profile support on a 240 at 60.35. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're looking at the intraday charts here for the ES Mini, and really the only levels that I can identify. Why did price stop where it did this morning? So these would be key levels to most certainly watch throughout the day. The 2-hour time frame chart, that's your upper right-hand corner, has support at its breakout level. That's at 60.2950. This is the second time that's been tested. You can see also at 60.35, you've got the profile support for the 4-hour time frame chart. So that's really all that I see out there for the ES Mini. Let's put up the NQ here real quickly, see if that provides us with any. So in other words, there were no bottoming patterns that I see out there that had formed. Just getting back to that breakout. When you get back to a breakout level of support, those red horizontal lines on my screen, that can't be a bottom pattern out there. It's just not like an A to B equals CD or a TD9 count or a Rhodes Momentum Indicator or wave number 7 or anything along those lines. As these NQ charts are popular, I can see support at 60.35. At 60.35 at 21.501 to 21.528. The first being the breakout level for the 4-hour time frame chart, the latter being the profile support area. Profile support at 21.528 as well for the 2-hour time frame chart. The 5-hour time frame chart, 21.501, is its TD9 count breakout level out there. So those are the areas that I would be watching inside of the NQ. Of course, watching the top of the profile, which today it tested and rejected, 21.535. Is a pretty good thing. So let's go on to some of the requests that have come in. The first one coming in this morning from Brent in Martinez, California. He was an early bird catching their early worm out there and wants to take a look at ticker symbol ACLS. He's been watching this for a period of time. He's been watching the A to B equals CD patterns that I've drawn in here as well. That A to B equals CD pattern, whether it's on the daily or the weekly, they're really both the same. They have an initial price projection of 51.38. We're trading right now at 58.96. So you can see see on the monthly time frame, which did have a TD9 count top, price is pulling back. That A to B equals CD pattern, Brent, is also pulling back to its breakout level of support of 49.78. So you would most certainly love to see price get there, hold that level, and see a bullish reversal candle to confirm a bottom. On the weekly time frame chart, it might be easy to confirm a bullish reversal candle, but first we got to get down towards that 51.38 level. We are below its red oscillator and change line. There's no other bottom signal out here. Wave number F, number 6 that it's in right now, so that should continue to head lower. And then finally on the daily time frame, right now price is moving lower with less relative energy out there. It's got that Rhodes momentum indicator signal. It negated a TD9 count bottom pattern about 4 days ago. So this needs a bullish reversal candle to confirm a bottom pattern as well. Not the A to B equals CD, although this might have a smaller A to B equals CD pattern than the weekly or the monthly. But this looks good. I think just more patience is in order out there. And so that's what I've got, Brent. So I hope that helped you out. As always, good to hear from you, and have a wonderful Wednesday. Inside the Tiger's Den, Duncan Steve wants to take a look at a couple instruments, Amazon being the first one, and that's not but you also asked about the SMHs, which is I probably put it in a different spot, but I also have to have them here. So let's look at the SMHs first on a monthly time frame. And I know I sound like a broken record, because I am a broken record out there, but nothing but a sideways consolidation moves for 1, 2, 3, 4, 5, 6, 7, 8, 9 months out there. A full 9 months. I know it seems like prices moved up. Now, some of the stocks, that's the case. But with regard to the SMHs, basically it's a consolidation between 235 and 259 out there. Weekly time frame, prices traded with inside its profile, support at 208, resistance up at 274. If we take a look at the daily time frame, the SMH is trading below profile support, below its red oscillator and change line, suggests that it wants to move lower out there. That's really what I've got on the SMHs. It's in a consolidation pattern. The monthly chart shows you that. I don't see anything changing here at any time soon. So to a certain extent, the semiconductor is dead money at this moment in time out there. And I know everybody else is trying to really get in there. But, man, just look at that sideways pattern out there. Not that you can't, day trade and stuff like that, but that's what I see, Duncan, when I take a look at the SMHs. Let's go see if we can find Amazon now. That's probably right here, and it is. So when we take a look at Amazon, what we know about it is it had a TD9 count top that had a high of 241.77. Price closed at 242.06 on February 4th, in the gate of that top. Now, it had a Rhodes momentum indicator signal, and we have price that gap down here on February 7th. That gap, as long as that remains open, and that will remain open as long as price does not close or does not move above, I should say, 236.01. So it has a Rhodes momentum indicator top. Price right now is testing its buy zone. The buy zone of its profile is between the range of 229.96 and 231.57. If price closes below, I would say if price closes below the low from February 7th, 228.06, that signal, and that had volume there of 77 million shares. Today so far, 10 million shares in 2 hours trading. Really light volume compared to that day. But if it does close below the low of February 7th, Dunk, maybe it gets down to the 220.31 level. On a weekly time frame, I can see a wave number 7 topping signal out here. I can see prices trading with inside its profile, below its oscillator and change line at this moment in time. It doesn't matter where we're at on Wednesday. It matters where we're at on Friday. And finally, on the monthly time frame for Amazon, it has A to B. It's got a couple different A to B equals CD patterns, quite frankly, but it does not have any kind of a topping signal. No TD9 count top, no 7th wave top, no Rhodes momentum indicator top, no top, no bearish reversal candle or anything along those lines. So Amazon on the monthly chart looks good. On the weekly chart, looks pretty good, although right now with that consolidation, and really on the daily time frame chart, I've already provided you with the information there. So Dunk, hope that helped you out with both the SMH and Amazon. Let's go take a look at XBI. Oh, this is probably the SMH, yep. So Stevie had it in there twice. Let's go take a look at XBI, and that's going to be for SAT-P. And so when we take a look at XBI for its monthly time frame, let's just start there. You've got a consolidation with inside its profile. Support down at 83. 66, resistance 95.58. Price below its red oscillator and change line. It's telling you, it's signaling that it may want to get down to 83.66 level. Now, it can't get to 83.66 until price takes out the bottom of its weekly profile, and that's at 87.75. But the real key number that you're watching at here, so on a weekly basis, price is trading into the swing point from January 17th. 53 million shares traded hands that week. So far this week, we're almost halfway through. We got 21 million shares. So, you're getting your similar type volume. If price were to close below 86.40, that's that low, that'll trigger a fairly large A to B equals CD pattern to the downside. We don't have that right now. You're moving into a swing point with light volume, and you've got profile support at 87.75. Nonetheless, you've got to watch because if profile support breaks and we close below that low from January 17th, that says we head even lower. Now, on a daily time frame, the XBI formed a Rhodes Momentum Indicator bottom, and it did that on January 13th. And that low out there was at 86.71. And the very next day, price closes at where? At 86.66. And negated that Rhodes Momentum Indicator bottom pattern out there. Price right now looks like it wants to go after the swing low. That's a swing low from January 14th. 13 million shares traded hands that day. So far today, we're at 3.3. We're at about 9, 10, 11 million shares. That's likely where price is headed to, the XBI. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We'll take a look at the stock charts here for workday. WDAY is the ticker symbol. Monthly chart shows us that price is trading with inside its profile, fairly large profile. Support down at 219. Price running into its sell zone, and it's really acted as a sell zone. The last 4 months, it's between 278.50 and 300.35. So that helps us when we take a look at the weekly time frame chart, because we know we're trading into an area where there's where there's a lot of sellers out there. We are now trading below its weekly green oscillator and change on a 261.22 out there. As long as it remains below that, it's suggesting that it wants to head lower. So now when we look at the daily chart, we can see that price is trading below profile support right now. 257.63. You'll watch that at day's end. We're at 256.93. A close below 257.63 will add to the idea of a move down to 247.46. Now, on a monthly time frame, you can't see that price is sitting at support. So it won't be that easy. That's its oscillator and change line, 257.09. So that's a key area out there, that 257.09. I'd say that's what price has to move below before we get down to this 247.46 level out there, and that is for SAT-P. So that's what I see when we take a look at workday out there. I hope that gave the information you were looking for. You had a second request, which was to take a look at, maybe I already got the first request out there. I think I did. So let's go take a look at the first request for Eddie in Boca. Eddie wants to take a look at Vertex Pharmaceuticals. So Vertex Pharmaceuticals makes a top with a wave number 7 top. It confirmed that on February the 6th out there. And now, yesterday, price closed just a smidgen. I do mean a smidgen below profile support, but today is more than a smidgen. Profile support out there is at 455.21. We're trading below it. We're in bar number 4. The weekly time frame chart is testing a key level of support as we speak right now, Eddie. That key level of support is 449.86. Of course, does that matter where we're trading on a Wednesday versus on a Friday? Well, at least, use that. Prices stalled on the daily. If it starts trading below that level on the weekly, it's going to continue to move lower. And if it closes below that level, well, then it's going to most certainly move lower. That would be price, or likely move lower, I should say. With the price target then being 437.02, the bottom of the weekly profile. Now, if price were to take out 437.02, and I'm not saying that's going to happen, then we get to the breakout level on the daily time frame. So let me summarize it for you. We're really just focused here on the weekly and the daily time frame chart. The monthly is just simply a Rhodes Momentum Indicator top with consolidation with inside profile, 402.97 up to 498.68. But on the play-by-play, we're watching the weekly chart because it's sitting right at support with inside its profile at that oscillator and change line. And if that level fails, then that's going to suggest a move to 397. That is the daily breakout message. But we also can see that on a weekly basis, 437.02 is profile support, and that would be the first level. That would be the next level of support to the downside. We're setting that support as we speak right now. Eddie also wanted to take a look at one of his favorite stocks. It's the favorite stocks of many, or at least it had been, and that's called NVIDIA. In the case of NVIDIA out here, it's really got a consolidation measured move breakdown, but it hasn't achieved those levels out there. But with price trading above its red oscillator and change line right now, and below profile, it's kind of in nowhere zone. So let's see, we had a 5-day rally and a 1-day pullback out there. Is this day number 2 of its pullback? If so, and it's in bullish mode, this should be the end of it. Day number 2, that is, and we should continue to move higher. Now, move higher to where? It's got to deal with resistance up top, and the first level of resistance is 135.76. By the way, if I didn't say where support was, it's the red oscillator and change line on the daily time frame. Currently printed 127.85. Drop off the cents. Just call it 127 out there. So that support resists 135.76 on a weekly time frame, and it's going to need to get its signals from the daily. The weekly, we know everything we need to know about NVIDIA right there. TD9 count top. That identified that top, and its breakout level of support is where it held. That's at 114.86. So the weekly chart is saying my work to the downside is done. I'm ready to move to the upside. The daily never put in any kind of a bottoming signal out there as we speak, and the weekly still had a little, or the monthly, I should say, had a little bit further to get to support, which would be at 109.42. It didn't do that. It's trading back above its green oscillator and change line. It's kind of taking its cues, its P's and Q's from the weekly chart. So it's really about the daily, Eddie. 127 or 135.76. Those are the two levels to be watching. Until then, it's going to be like watching paint dry out there, and that ain't no fun. Also, you wanted to look at MNDY out there. Monday, something with an MNDY in it. And we can see this is traded out of 327.84. No, at 328.06. And that's a beautiful thing. Why is that? It looks like we're at a new all-time high today. Well, we were 2 days ago. I take that back. Let me open up the monthly chart, make sure that is an accurate statement. It was an inaccurate statement out there. But what it does have and what it's shooting for out here, Eddie, is 362.26. 362.26 is a TD9 count bottom out there, TD9 count breakdown level. That's what I should say. So it looks like it wants to head up there, 352.26. The weekly chart does not have any kind of a top. It's traded above all profile and oscillator and change line resistance out there. It's trying to take out a swing point on a weekly basis. That was a wave 7 top. That was from the week of November the 8th out there. 3.1 million shares traded that week. So far, we are at 4.4 million shares. Now, that is a beautiful thing out there. On a daily time frame, let me open this up here. You're in bar number 7. No topping signal or anything along those lines that you have to really worry about. It's dealing with a swing point on a daily basis. November 8th, there was 816,000 shares. Tested a couple days ago with 6.3 million. 2.2 million, yes, sir, 2.8 today. You've got 590,000 shares. So it does look like MNDY wants to continue to move higher. And that price target, I would have to say, is going to be that monthly TD9 count breakdown level out there, 362.26. Let's move on to our next request coming in from Ron R. inside the Tiger's Den. Ron wants to take a look at light sweet crude, specifically the daily, the weekly, and the monthly time frame. So on a daily time frame, what we have out here, you can see how that oscillator and change line, Ron, has acted as stiff resistance. Price rallied right up into it yesterday, turned down here this morning. Now it's got support. It has a buy zone. We're looking at the March contract here. We're going to be rolling over next week into the April contract. My recollection, it's correct. But right now, what you're dealing with is the March contract, and its buy zone, where the buyers are located, is between 70.91 and 71.38. If you want to know where the sellers are at, they're at 73.11. And if price could get through, if buyers could push its way through those sellers at 73.10-ish or so, well, then you'd have resistance up at 74.23, Ron. You'd have to break 74.23, meaning close above it, to say I'm ready to head higher. And that head higher would be 74.31, followed by 77.86 out there. So on a monthly basis, you have a new profile. Prices trading with inside that profile, 65.18 and 72.84. Consolidation inside the weekly profile, 69.24 to 78.12 out there. Steve Rhodes with TFNN. We come back to this break. Let's look at PNC, IBM, Gold, and GSAT. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the charts up here for Light Sweet Crude. We got the March contract. We were taking a look at that as we went to break. I think we've already really covered this. So just that consolidation in the daily, weekly, and the monthly profiles out there. Yeah, so I covered that. We're going to go take a look at PNC next out here. PNC, this is for Mohammed. PNC right now is trading back inside its daily profile. The top of that profile is at 195.46. So if you close below that, that could be signaling to you that it wants to go tackle its buy zone, Mohammed. The buy zone between 190.62 and 192.23 for its daily time frame. It's trading into a daily swing point from January 16th. There was 5 million shares that day. So far today, you're down with 408,000 shares. So you're moving to that swing point with light volume. Nonetheless, a close below or close back inside his profile could open up the door for that 190 to 192 test. You're trading with inside the profile on a weekly time frame. Here on a rally, you can see that the oscillator and change line is acting as a key resistance point. That's at 204.59. Finally, on the monthly time frame, this does not have any kind of a well, it has a sell the D point top. That sell the D point top took price all the way back basically to its oscillator and change line. Currently printed 184.46 out there. So its work to the downside might be done. So the monthly says the work to the downside might be done. It won't be done if you see a close below 182.17. Then that would suggest lower price. But right now, let's say the work is done on the monthly chart. The weekly, not too sure until Friday. Daily time frame chart, it's really going to be all about support out there. So that's what we see when we take a look at PNC. You also want to look at IBM. Maybe its chart patterns are clearer. Let's go find out. IBM right now, printed out at 254.13. It's within inside its profile. The support level out here on a daily time frame, Mohammed, is 248.14, and resistance up at 265.72. But I don't have any kind of a topping pattern that I really see out there in the daily time frame. Whereas on the weekly, we do. The weekly last week formed a bearish shooting star, and it had a Rhodes momentum indicator signal triggered out there. Now, price is above the top of its profile and its green oscillator and change line. So even though you have a weekly top, the overall signal, quite frankly, is neutral. It's really because you have on one hand, you've got bullish breakout mode, but on the other hand, you have a Rhodes momentum indicator top. So which is it? It's both. It's neutral. That's why I say it's neutral out there. And finally, we take a look at the monthly time frame chart for IBM. Likely to form bar number 8 of a TD9 count top this month, I should say. That says you could see a top between February and April out there. But right now it's in bullish mode, bullish condition. There is a wave number 7 top that needs a lower high to form. So the earliest that could be confirmed would be at the end of March out there. So Muhammad, hope that helps you out. HD, I don't know if I'm clear on what you were looking for. I think you were looking for the gold contract. So I've got that up on my screen. You're looking for an entry point. That's going to be tough. I could tell you that it would have been at about 28.92 to 28.97 as one possibility. That would be the risky side. And the reason I say that is you can see that yesterday was a completed TD9 count top out there. And quite frankly, not until that high gets taken out, when I mean taken out, I mean a close above, will Stevie be comfortable on this gold move out there. Well, the high from yesterday, all-time high, 29.07, even Steven. That's on the April contract out there. But price had a nice bullish action this morning by getting back and testing, rejecting the top of the profile in that green oscillator change line after confirming a top. So it, too, is neutral out here. It's in bullish breakout mode, but it's got that daily TD9 count top. The weekly says, I don't know what the heck you guys are talking about. I am definitely in a bullish breakout mode there. We got to be paying attention to the daily. I can share with you that gold, and we'll take a look at gold priced in some of the other currencies. Not today. I'm tracking them. Gold in euros has formed a TD9 count top. Gold in yen, not gold in yen. Gold in Chinese yuan has. So we're going to watch the international, just like we're watching the FTSE and the DAX, but mostly the DAX, which is telling us there ain't no way right now today, I can say specifically today, and at 11:46, there are no signals there. We are at any kind of a major top inside the equity markets, period. Those patterns just aren't present out there. So I hope it was a gold contract that you were looking for. Maybe if there's time, I can put GOLD in case that's what it was. But right now, I think you just got to sit tight because we're trading between support and what definitely is resistance because of that topping signal out there. Let's go take a look at GSAT. This is for HD, who wrote in, and boy, what heck of a week this had about 5-6 weeks ago. Now, what it was doing back then, you can see that wide-ranging bar, one of the wider-ranging bars that you'll see out there. Turned out that was bar number 9 of a TD9 count. The bar following was the bar following bar number 9. That set up a TD9 count top. In order for that TD9 count top to get negated, you got to see it close above 34.50. Excuse me. Now, the weekly TD9 count top took price right back to that oscillator and change line. So its work to the downside has been done at this stage. If you do see a close, though, below that green oscillator and change line, that's currently at 21.52, then that could signal a move back to profile support in a buy zone area between 510 and 844. We're not there yet. We wouldn't get there. You've got on a daily time frame, you have a wave number 7 top, and you have an A to B equals CD pattern. You have a buy the D point pattern that was formed out here with this bullish piercing candle on the trading session of January 31st out there. But what that did was that led to a rally into the oscillator and change line, and that's your real resistance level. Right now, that's at 26.77. Yes, you have other resistance, such as profile levels, 22.73, 24.98. And for support, this is what you're looking for, will support hold at 20.48 out there. You've got a gigantic gap. That's the thing that makes it somewhat dangerous because, at least it's showing up as a gap on my charts. I don't know if this is correct or not out there. I'm just going to have to go with it at this moment here. I closed down my black background charts. Maybe somebody's seen something else out there, but that's what I see when we take a look at GSAT out here. Let's go take a look at Tesla from McGuppy inside the Tiger's Den. And McGuppy is looking specifically for long-term support. Well, you've got to get to the right chart out there in order to provide you with long-term support. And that means a monthly time frame chart. So I'll give you several levels because there are several levels. First, price tested and rejected that swing point. You can see that blue solid line out there. I believe that it did it with volume. But the first level of support is at 304 and change. That's the green oscillator and change line. The second level of support, McGuppy, is 214.16. A third level of support and it's really a range. That third level would be between 164.07 and 176.70. And finally, the last level of support on some gigantic move to the downside would be 56.94. That's Tesla's TD9 count breakout level for its monthly time frame. Now, on the weekly time frame, price is testing support right now, and that is its buy zone. And that buy zone is between 327.15 and 345.08. A close below 327.15 will take Tesla back towards 238.88, the level where it broke out from. And on a daily time frame, we have an A to B equals CD pattern to the downside. A bullish reversal candle would confirm a Gartley buy point, and that would suggest being long, and price would rally up towards its oscillator and change line. That's at 374. Watch for that pattern. That pattern could easily form today, tomorrow, the next day, because the weekly time frame is sitting right at its buy zone. Steve Rhodes with TFNN. What requests do we have in here so far to end the show? FTCO and SMCI. So we'll definitely get to those. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So we'll take a look at some FTCO. This comes in from Marty. Marty says, what do the charts say about FTCO? They say that you're dealing with resistance, that resistance both on the weekly and the monthly time frame, and that is profile resistance. The top of the profile, that's where sellers exist on a monthly basis at 559. The weekly basis where sellers resist is where we're at right now at 545. We're trading at 545 exactly. So you're dealing with sellers. If you can close above 545 on a weekly basis, it's really about 559. That's that monthly profile resistance area out there. So the daily has a wave number 7 top. Looks like that's going to be confirmed today. That would then suggest that you at least get a retracement towards 535, maybe 528, 520, could even be 511. Those latter three being profile support areas out there. The first being its oscillator and change line. But it's just dealing with resistance out there, Marty, and that's what it's doing. So you asked the question, and the charts were able to answer that question, and that is a beautiful thing. Last chart we're going to look at, perhaps last chart, we got a minute, just about a minute left, is SMCI for Joe. Let's look at the monthly chart here. Monthly chart has got a brand new profile that formed out there. 2567 is support, and 5933 is resistance. On a weekly basis, I don't see a bottoming pattern, but maybe there was an A to B equals CD pattern to the downside. Was there? Most certainly there was. So you've got a buy the D point pattern that formed out here on the week of November 22nd. We have prices trading above profile resistance. No reason for it to not move higher. This would be week number 2 to the upside. As of late, week number 2, that's pretty much all that it's had. But that's when it was in a downtrend. Right now, you've got that buy point. I would expect that maybe you can even get beyond week number 2. The daily time frame for SMCI shows that the issue is its TD9 count breakdown resistance level. That's being tested today. That's at 43.41 out there. You're in bar number 7. So this could be forming a TD9 count top on the daily time frame over the next couple of days. Folks, stay tuned for all the great programming. I'll be back with you tomorrow on Terrific Thursday. Please have a wonderful Wednesday. Thanks for joining us, and we'll look forward to seeing you again soon. Take care.